Everyone says AI is the future. Every headline screams revolution, and tech stocks have exploded in ways we've never seen before. But behind the hype is a growing fear, whispered by economists and traders. What if this is a bubble? And what if it's the biggest one in history? I'm your host, Pierre Shields, and this is North of MAGA. Today, we're breaking down the numbers that the media won't explain. Why everyone is suddenly nervous. If you look at the stock market, especially in the US, it feels like nothing can stop AI. A handful of tech giants have added trillions in value almost overnight. But recent economic analysis shows something strange happening under the surface. Tech stocks are wobbling, investor confidence is inconsistent, and a small drop in the market is triggering outsized panic, despite being a poquito compared to earlier sell-offs. And the biggest question emerging is, are AI companies actually growing, or are they inflating each other? The rise of Nvidia and the AI money loop. Nvidia used to be the gaming graphics card company. Today, it's worth more than entire countries. Why? Because their chips power almost every major AI model on the planet. Around 90% of global projects rely on them. But here's where it gets really weird. Nvidia recently pledged massive investments into AI labs like OpenAI, which sounds absolutely normal and is great. Except those same labs then use the money to buy, you guessed it, more Nvidia chips, meaning the investments boost Nvidia's own sales, hype, and stock prices. And investors start wondering, is Nvidia paying itself? This isn't illegal. It's just circular. And that circularity is what's making the market jittery. When companies look more valuable than they actually are. Major financial outlets have mapped a web of money flowing between the biggest AI firms, and it's really messy. They're tied together through investments, partnerships, shared infrastructure, and overlapping ownership. The result? A huge chunk of their valuation is based on speculation, not revenue. For example, OpenAI has spending commitments north of $1 trillion while losing money on every query a customer runs. Now think about that. A company that loses more money the more clients it has because the energy, cooling, chips, and infrastructure cost more than they charge can't be sustainable. The hard math behind AI. Let's break down the economics. Training a frontier AI model requires tens of thousands of GPUs, hundreds of millions in power and cooling, billion-dollar data centers, software, researchers, and security, and upkeep on hardware that becomes obsolete in just a few years. A GPU sitting unused for a couple of years becomes worthless, but a train track sitting unused still works. That means the AI world is on a clock. If these models don't start earning back the costs fast, the bubble doesn't need to burst. It just needs to deflate. Why the stakes are global. Here's the part nobody talks about. Tech stocks now make up almost half of the entire US stock market. And US stocks make up more than half of the global market. So if AI stumbles, even a little, the shockwave hits pensions, investments, retirement funds, and international markets. The 7 biggest tech companies combined are now roughly the same size as the entire Chinese economy. And Nvidia alone is worth more than Japan. This isn't just a tech story, it's a global stability story. Is it really a bubble or just growing pains? Optimists argue that AI is like highways, railroads, or electricity. Huge upfront costs that eventually transform the world. Skeptics will tell you, no other industry burns cash at this scale. No other product becomes obsolete this fast. No other investment loop looks this circular. So who's right? The truth is, AI can still change everything, but expectations are running ahead of reality. And that gap is where bubbles form. Takeaway. AI isn't going away, but the hype circle around it may be hitting its first serious stress test. If the revenue doesn't catch up to the investment, if speculation keeps outpacing fundamentals, if circular deals keep pumping valuations, then the correction could be bigger than anyone expects, because the entire global market is leaning on AI's promise. What do you think? Are we witnessing the birth of real economic revolution or the early signs of an AI bubble? Drop your thoughts in the comments. I read every one. I can't reply to every one. I try to, but I try to read everything. And if you want more clear breakdowns of global economics, tech, and geopolitics from a Canadian perspective, hit like, subscribe, and share this video. Thanks for spending time with me. I'm Pierre Shields. This has been North of MAGA. Go play outside.